we basically, would kind of flatten out and then start trending lower. And of course, there's going to be this last squeeze. Now, what I wanted to make sure you guys understood, and actually this could be considered really sort of advanced stuff that people should definitely pay for this information. But honestly, I'm going to throw it out there because most of the time, you guys aren't able to get this. We are not able to catch this. And what happens is they need to make sure, and when I say they, I'm talking about smart money. Smart money has to make sure they position everybody in one direction, okay? That means they even make all the short trades believers, okay? So all this consolidation here that you saw in the past 10 days, this is them just saying, all right, we're still bullish, we're still bullish. If you looked at all of your sectors as well, especially the banks too, banks have been super strong throughout this whole thing. And then today happened, okay? And then today happened. We were kind of holding down 167.5, you see, all right? All of a sudden news comes, or Bernanke comes out, comments are being made. We shoot up to 169, okay? And you got to think about the dynamic here, okay? Think about the short traders, okay? Think about the bears, the people who are, betting against this market. Everybody's covering, okay? All the shorts are covering. And then people are getting long again for a fresh big picture breakout that would take us up to 170, 171, 172 even on the spot. Again, this is what the smart money has to do before they pull the rug out, okay? And clearly they pulled the rug out on everybody today. Most people got caught on the wrong side of the trade, meaning the long side, okay, or even the short side if you're looking at it from my perspective this morning. And they just file everybody in on one direction. That means the least amount of people are going to capitalize on this move. And most people are going to look at this and say, holy crap, what the hell is going on? What happened in my long trades? What's going on? This is where the biggest money is made, guys. This is what I live for. This is it. These big reversal trades after the market has been consolidating and it's been on a certain path. These big reversal trades, timing these trades, this is what I live for because this is where the money is. And it's there for about 1 to 2 days. Chances are tomorrow morning we'll get some continuation on, maybe some stocks that we've been short. And that's kind of what happens. This is where the big money is made in the markets, all right? Obviously, there's big money made in the trends here. Don't get me wrong. There's huge money made in the trends. These buying these Googles and just going long these things, all right? There's giant money being made there. But for us day traders, okay? And now let's go back to the weekly versus monthly options. For us day traders, if you're going to day trade, and again, this goes back to us, the original the tape reading webinar we did just earlier this week, is that if you have access to good platforms, meaning, high-tech platforms, if some of you guys are using Lightspeed, Sterling, and all that kind of stuff, you guys are day traders. That means you guys know at least how to look at sentiment. You know how to look at a level 2. You know how to read a time and sales, at least generally. You might not understand tape reading completely, but generally you know what the hell you're looking at. And for any day traders, this is why I recommend using some of the weekly options, simply because you're just playing for the day. You're playing for the day. You're playing momentum. You're playing what you see on the tape. That way you can get out quickly if things go wrong. You can manage the risk. Most people think weekly options, oh my God, oh my God, oh my God, they're so risky. Oh my God, I can't play them. Oh my God, I can't play them. That's bullshit, okay? You can play them. You can manage the risk provided you know what the hell you're looking at. You're doing some of the tape reading here. You're looking at your level 2s and things like that, all right? So quick rundown here on the trade that we made today. I was short the SPY coming into the morning, okay? And I actually want to show you one of these options. I want to show you a couple of these options. And, this will also help you understand the difference between trading some weekly options versus trading some monthly options. So let's queue up some SPY puts. Let's queue up this weekly one that I was in the morning, and then we're going to contrast it with, some monthly puts if you wanted to get those as well, okay? So real quick here, actually not quick because my computer friggin' sucks. 166.5 put. Let's pull this up. Okay, now this is the one that I was trading in the morning. Now when you see this chart, you're going to friggin', it's ridiculous, especially in the morning, all right? So 50 was the level. Guys, there's levels on options, okay? That's the other thing you need to realize. There's levels on options. Even if you're looking at weeklies, you're looking at monthlies or whatever, if you're watching tape on an option, you're that much ahead of the game from the guy who just watches tape on an equity. Okay, so that's just a quick tidbit. So just on this 5-point, I was buying up here, obviously, in the 50s. So I was buying 45 and change, sold out here for a loss, tried it again here, sold out for a loss. And again, this was this big move up here. Everything got, again, just washed out completely. I got washed out and then saw my option go right back up to where I started buying it. Remember, I started buying in the morning, okay? And I'm on the 166.5 weekly. This thing expires on Friday, so there's only 3 days left till expiration, okay? Notice how quickly this thing drops out in premium, all right? I was down a considerable amount of money. I was down maybe 10 grand off that position, because, again, I get in with size. And when I like something, I try to get in with size. So I'm throwing around 100 contracts at 50 cents, 49 cents, 48 cents, get smoked out once. Then I see this ridiculous 10-handle sell-off. So now I'm like, okay, that's it. That's it. She's going to tank. Buy again, get shaken out again, and then I see the weakness. I see the slow weakness. And then all of a sudden what was different was that if you looked at all your sectors, especially the tech stocks and some of the other names out there, Bank of America, even the banks started trailing back, everything else all of a sudden started to trade together around here and then slowly, slowly pushed down for the rest of the day. So I started building the position again at 50, and you see all this volume down here. Most of this is me. I bought about 2,200 contracts. I had a good, I had a cost around here, 60, 62 cents, and then sold up around here. $1.10. I missed, this big leg up.
That was my fault, guys. I was actually looking at the risk. We had gotten some gains, and honestly, I actually had gotten stuck. What's really, really crappy about direct market access platforms is that if you click too many times, you're going to exit out a little too much there. And I was actually only supposed to get out half the position. Actually, a few hundred contracts. Ended up getting out half the position pretty much.
Yeah.
At that area, which was kind of wonky, but still, we caught most of the move. We're still here.
Yeah, and, we caught a good bulk of the move. Again, I was able to get 2,000 contracts. I wanted to get more. Another thing that I want to reiterate is that when the big picture move happens, you don't have that much time to build into it, unless you're stomaching some pain here, okay? And if you're going to play weekly options, you're going to have to stomach a lot more pain than a monthly option, all right? And then clearly you see that the rip on this thing was absolutely absurd. I was trying to get 10,000 contracts, but then after 2,200, I was like, nah, and then it just ripped all the way to 90. I was like, all right, I can't get 10,000 now, so I just threw it out the window and then just started taking profits here, okay? Also, I was in the Google, okay? And I want to show you the Google options as well. So let's take a look at the weekly option for Google. And again, we're going to contrast all this by showing you the monthlies on these things, and then showing you the difference here and some of the things that you need to keep in mind, when deciding, okay, do I want to trade weeklies? Do I want to trade, do I want to trade monthlies? And then you can really figure out for yourself what the hell you want to do. All right. So if my computer would work any freaking faster than this, this is ridiculous, dude. I got like 32 megs on this stupid thing, and I can't even get a damn option chain. All right. You know what? So what we're gonna do is I'm going to show you this JPM, okay? This JPM is a monthly option that I'm in right now. Actually, this thing just came up, so let's just scoot back over. I had the 890 put here, okay? Let's take a look at this one. All right. Now, you can see how difficult this one was to trade, okay? This one was extremely, extremely difficult to trade because look at the range that you get here. $2 to $3, this is a very difficult range, all right? And whether you're playing weekly options or monthly options, when a stock is in consolidation like this, okay, and let's take a look at the underlying so you can see what it was doing. So stock is just doing nothing, basically doing nothing, up around 100 or 900, not doing anything. And remember, 900 and even a little bit below is a lot of support. So people have just been holding this stock up. They get it down here, and then they just kind of rip it right back. And you don't really get the premium on it, okay? So notice, even though this stock broke $900 twice today, look at the premium here. It spiked over $3, but then immediately disappeared. Okay, same thing here. Immediately disappeared, right? obviously they are holding this thing up. So you knew this thing was weak, it was holding down, but you didn't really have anything to go on here. Now imagine if your cost was $3 and you got 100 contracts. You're going to go down to about $1.80 bid, and you're going to look at your P&L down $12,000. What are you going to do? Chances are you're going to sell out of it because you're a dickhead on the price here. So this is the kind of the object that options traders have to deal with. And this is that kind of second-to-second adjustment that options traders really have to deal with. They got to do it more so on the weekly options versus the monthlies, because as you can see, the monthlies won't have as big ranges as the weeklies do. Okay? Now, as you can see, this thing started to move here. This is me. A lot of this is me here buying a crap ton of this, and then boom, you know, this thing is just shooting up in premium. Look at the time though that you have. You got about 20 minutes here to build your position, and then that's it. It's off to the races. But look at the pullbacks on this thing. You got a $7 option down to 4.5, and then back to highs here. So this is pretty nuts here. So when you're looking at your P&L, you're saying, holy shit, I'm up 200,000, and then you're looking at it down 2.5, and you're looking at your P&L now, you're only up 100,000. So again, when you're looking at your P&L, guys, if you're playing weekly options, your P&L is going to go freaking crazy, and you have to get used to these things. Okay, you got to get adjusted. You got to build your stomach tolerance, so to speak, when you're playing some weekly options. All right,
guys. Just to add to that, you don't have to initially, expose yourself to these giant swings. If you're used to only swinging, a couple $100 at a time in terms of P&L up and down for a stock position, right, you should translate that over to the options. Now remember, all options, at least the ones that we play, are 100 times your value there. They represent 100 shares of exposure. Right. So remember, just to size down properly with those options. And another big thing about weekly options is that they give you time to work out of. They move better than monthly options, which is another big reason why we play weekly options. One of the big notes is that if you look at the markets as a whole, it's been harder and harder to swing positions and hold for any period of time, even while we melt up. Some of these stocks just take a little bit of time. They don't look good technically. The tape is unclear from one day to the other. And the sustainability that was around, maybe 3 or 4 or 5 years ago is not like it is now. And so what you have to take into consideration is that markets have compressed. Bigger moves happen during the day, but overall moves throughout, weeks or months have been relatively minimized compared to how they used to be. So in that case, it's actually better for us to play weekly options than it is for monthly options, because monthly options take forever to actually move.
Yes, and we're actually going to show a couple examples of that right now, and then some of the downfalls here of both strategies here, guys. Remember, the key for you guys is to understand what type of trader you are. If you're the day trader and you're trying to understand what's going on the tape and you're trying to be there with the momentum when it happens, then weekly options are something that you should really look into. If you're somebody who, again, doesn't really, is not super active in the markets, meaning on a day-to-day, second-to-second basis, then maybe you should take a look at some monthlies, okay? Now, I'm going to show you an example of these monthlies that I actually played today on JP Morgan. And oftentimes you'll run into this situation where it's better to play a monthly, versus some of the weeklies, okay, depending on what day it is and all that kind of jazz. So let's take a look at this JPM monthly chart, okay? So this is the monthly option on JPM, all right? Now this is a 52.5 strike, and this expires in June, okay? So this expires all the way out in June, and you got, we got another month here left until expiration. There's another 5 days left in May, and you got another 15 or so days left in June, okay? So this obviously has plenty of time left till expiration. It's worth about, 70 cents, 60 cents, okay? And what happens is that slowly, okay, these things don't have as much decay as the weekly options, all right? Now let's take a look at the weekly options here. All right, this is a weekly 53 call. Now this is out of the money right now, okay? And again, this expires this Friday. All right, now let's take a look at JPM. Chrissy, I will get to your question in a second. That's a great question too, by the way. Okay, so let's take a look at this JPM. She's trading around 53.5 after hitting about 55. Remember, everything reversed today. So chances are we're going to get some follow through here, and this option is going to go into the money. But look at this. Look at this. Stock opens at 53. We move all the way up to 55. This thing loses out in premium completely. okay? So anybody who's buying this is dead in the water, completely dead in the water until this thing starts coming back to the opening price, okay? So we almost came back to the open price at around 53.20 or whatever the hell it was, and this option spidered back up to over 20 cents. Now, if the stock remains in, let's say, a dead zone at 53.5 or 54 or whatever, the same thing is going to happen tomorrow. The premium is going to come out so quickly on this option, and if you're too late on this thing, you're going to get smoked out. So if you're sitting here buying 20 cents, expecting a move here, this JPM needs to gap down or aggressively move lower tomorrow because she's almost expiring, okay? So if you're buying this option, this is a pretty risky play when you think about it. This is a pretty risky play because, again, the stock closed at 53.60, all right? And, you know, you're looking at a 20-cent premium here. So she needs to get through 53 in order for you to sell this for 40 cents or 50 cents or wherever the hell you want. Otherwise, this thing is going to get taken down in premium very quickly. Now, you take a look at the monthly that I'm in. This is not going to get burnt that much. Okay, let's say the stock goes up or just stalls out at 53.80. I'm not going to lose that much premium here. My cost is around like 62 on this option, and I have some breathing room here. I really do have some breathing room. And this is one of the things that you can do with monthlies versus the weeklies. You don't have breathing room in an option like this. Your move needs to happen now. It needs to happen freaking now. In a June option or in this monthly, I have some time here. You know, I have some time. I can twiddle my thumbs for a couple days. I can hang on. As long as I see some buyer holding this thing up, I'm okay. You know, I'm okay in this thing to let it go for a little bit. All right? So see, these are some of the contrasts here between monthly options and the weeklies. Now, obviously you need to figure out if you're going to be a swing trader versus the day trader. All right? For most day trades, if I know a move is going to happen right now, okay, or fairly soon, because I'm reading the tape and I see, holy crap, there's a huge seller in Google, I want to get in this thing, or there's a huge seller in the market, you know, I want to get in this thing. You know, so I will gladly hop in a weekly. Very rarely do I hold swings because, as Peter mentioned, it's very difficult to hold swings overnight and make money in this market. You really have to be in certain situations to justify you holding overnight, okay? And again, if you're a swing trader, you know that you're going to have to sit through kind of a range here and just kind of sit around for a while, and most of your premium gain is going to happen in 1 or 2 days, and that's the day that you just get the hell out, okay?
So we actually have a couple questions here asking about tape reading, asking about how we can time options and all this kind of stuff. And guys, these are really good questions. We're focused here on weekly versus monthly options, but if you're asking about tape reading and timing, you know, weekly options pay out the most when you got your timing down. And that essentially depends on how good your tape reading is and how good your risk-reward management is. And now we know we've got a couple people in here that are saying, oh, you know, how can you learn tape reading in 12 days? Or only 4 weeks. You can't.
You can't.
That's why we actually offer all of our students unlimited access to continue reoccurring or continue re-participating in the courses, live courses with us, to continue asking questions. They get to sit in the private chat room where only the students and long-term fellows are in there, so you can have reinforcement in all of it. Yeah. And a lot of times, guys, again, the reason why we enforce trying to play the weeklies is because you can avoid messing around with spreads, you can really manage your positions, and you don't have to be in the markets for too long. You could be in and out in one day, just like us, and score relatively big, and that could cover your month, okay? Right. And that's just something that you have to develop over time. It's a paradigm shift from playing stock all the time. You have to put like $300,000 on a stock position that's Apple to just make, you know, $5,000 bucks. But we only have to put on $5,000 to make $5,000 bucks in Apple. We want you to be able to do the same thing here. Right. And that comes with weekly options and also could occur with monthly options as well.
Okay, and then Chrissy, just to add on to that, you know, she's saying, or do you really expect your students to learn tape reading in a 12-day course? Honestly, I don't come into it expecting shit. I expect you to put in the work. And that's it. Tape reading is not something that you just magically learn in a 12-day course. So again, it's not like we're telling our students, you know, you can magically learn to make profits using tape reading. We don't play that game, all right? If you want to put in the work and you want to learn how and what to look for in a tape, time and sales, level 2, if you want to put in the work, awesome. We can tell you what to do in terms of that work. We don't expect our students to learn this shit in 12 days, nor are we telling people that we can either.
And just to emphasize there, we know a lot of the guys out there have smaller accounts, and people are always on the fence on whether they should do this or not. And what we again is try to tell them, hey, if you want to learn this, start off small. This is one way to really build up a small account. But if you're not smart in actually handling your account properly, and you just go willy-nilly and not pay attention, it's also a very easy way to blow out your account.
Indeed.
All right. So again, the ways that we teach in our course are to pretty much teach ourselves out of a job. It's for you to get good enough to do this on your own.
Right.
Again, it's not something that is like magic. We're not going to give you some. This is the crazy action,
formula,
instant reversal diamond pattern here, and that you're going to be able to make $1 million. We don't say those things. We try to make sure that you understand that this is about understanding what you're doing here.
Indeed, indeed. Okay, so back a little bit on the monthly options, okay? For the traders out there, and again, we're just going to do a couple more examples, and then we're just going to cut straight to questions, and then we'll explain all about the classes and everything. What I want to say for the guys who want to trade monthlies, and for you guys that want to swing options, what I really want to convey to you guys is how difficult the timing is for some of the monthly plays that you might undergo. So what I want to do is give you an example of the SPY bear, of a guy who says, you know what, I want to be short this market, and I want to build into a monthly short on the markets, and I'm sure many of you guys out there are trying to do this, okay? The cool thing about the SPY is that they open weekly options up now for 6 weeks in advance. So you can get the weekly for here, you can get the weekly for here, you can get the June weeklies here, June 14, look at all these weeklies here. So you can really select how much time you want to give to your trade, okay? Or you can just go the conventional route and take the monthlies. Let's take a look at one of these monthlies. And I want to show you a chart of some of these monthlies and show you how difficult it is to really get your timing down so that you're not still at a loss even when your move freaking happens, okay? So take a look at this 3-month chart on this, okay? Now let's assume, and again, we're not seeing today's wick. I think it's at like 230 here. It's at like 230 and change, okay? So let's assume you want to start building into a short position for June, okay? And you take a look at the markets, right? And again, you're always going to be early. So let's say the guy who wants to buy these options at 163, okay? And he wants to buy a 163 put. Actually, he wants to go out of the money. Because if it's 163 now, right, you're not going to buy your 163 option unless you're super risk averse and you want to stay in the money. You're probably going to buy something a little out. So you're going to buy the 162. So let's take a look at the 162 if you would have bought it that day. And assuming you're going to continue building into this position as it moves against you. But look at how hard this is, okay? Look at how hard this is. You're going to buy on what? You're going to buy on May 13th. That's right here. So you're going to buy an option at $2, okay? You're going to buy an option at $2. And remember, you can't see the action today, okay? I want to show you the action today. Let's see how low this option went. This option went down to 60 cents, okay? And meanwhile, you're telling yourself, okay, I'm just going to piece in, right? So you're buying 2, you're buying 1.5, you're buying $1. Chances are, when you see this move that happened this morning, you think you're going to hold that shit? You really think you're going to hold that shit? I don't think so. I don't think so. I think you're going to dump at 70 cents, and then you're going to look like a shithead when this thing just comes all the way back. All right? So the key thing for you monthly guys, and this is super sort of advanced, and you'll only really realize this once you actually start aggressively trading these options, is that at the last moment, before that reversal happens and before your trade comes, they got to wash out every last bit, every last person out of that option before you get that money back. And even when you catch your move, you still didn't even make your money back. You still haven't even made your money back because chances are your cost is what? $1.50, $1.70. You still haven't even made your money back. So now you need an even bigger move if you're going to sit in this 162 put. You need to move down to 164, maybe even lower than this, to really make money on this option. Okay? So what happens with monthly option traders and guys who want to do the swing trading, is that the timing aspect of it is still as important as the weekly options. It's just a little bit different, you know. You really still have to understand sentiment. You really still have to understand what's going on in the markets before you start averaging down or into a lot of these positions here, a lot of these swing trades that you might want to take. You know, most people are trying to, you know, even if you're going to dip buy something and you're trying to wait around for a cost, you know, it's not that easy. All right, it's not that easy to just pick an option here and watch it go higher. There's a lot of dancing around that you have to do with monthly options and swing traders that it gets pretty difficult, okay? This is where some of the big payouts are, though. Don't get me wrong. This is where some of the big payouts are. If you're right on some of these moves, I mean, you take a look at this Google or some of this price line. If you buy an 820 monthly here, you know, and let this thing just rock for you and it rips like crazy, you know, you're talking 5, 10, 15 times your money, way more than any weekly option strategy. So the real cheesecake, guys, is if you can time some of these swing trades on the monthly options. That's what the real cheesecake is. But not a lot of people can do this. Not a lot of people can do this. And not a lot of people are prepared for this. And not a lot of people hold through all of this anyway. Okay, so there's a give and take here. And you really have to understand yourself and your own kind of strategy, your own kind of personality to figure out, okay, are you going to try to swing some monthlies? Or are you just going to try to day trade it out here with me in the trenches? Okay, so that's our spiel on the weekly and monthly options. I think we're going to take some questions first. Did you want to do?
Yeah, let me run in real quick and just go through the class, guys. So, guys, the reason that we throw these webinars, yes, we love just sort of bragging about how much money we've made, and we like hearing our own voices, but it's also because we teach classes on this stuff, and we're here to prove to you over and over and over again that what you can learn from Pete and Lucci in these classes is real, right? There's a lot of people out there who say they can do things and they can't do it. We want to give you a taste over and over and over again of what you can learn. It is the tip of the iceberg. I think anyone who's been in our classes will tell you that. So with that in mind, let's bring, can you bring that thing over? Yep. So we have a special running this week. If you guys sign up before Friday, just type in the coupon code, type in early bird. Yeah. Just type in early bird right into that thing, hit apply, and you will hit apply on that, and you will get $250 off the price of the class, right? It applies to the payment plan as well. So we're incentivizing you to get signed up a little bit earlier. We start your access to the chat, your access to the on-demand video section right away, so you don't have to wait until your class starts. Like Pete said, we give you lifetime access to the classes, guys. So we had people who signed up back in October, and they're back in this class, you know, coming up in this next session, starting the day after Memorial Day. So that's this coming Tuesday. It's only $1,500. I know that sounds crazy, but let's be honest. If you saw the gains of what Lucci put up, even if you're trading with a $3,000 account, which plenty of our guys who take the classes trade with, the class more than pays for itself in the long run. It's really just like an investment, you know, in your education. Yeah, I think that basically covers it, guys. Oh, yeah, I know what I was reaching for. The last thing that I wanted to hit on was you guys were asking about tape reading. You know, I don't know if I can tape read. Some of you guys can't sit in the chat room all day. You know, you can't sit there watching the tape all day. That is okay. Yes, we do teach tape reading. Yes, we do want to make sure that you understand everything that we do. But there are guys who take this class, guys and girls who take this class, that don't scout. They don't have to, you know, necessarily read the tape. There are guys who swing trade, you know, using the option strategies that Pete and Lucci teach. So you can get a lot out of this class, even if you can't sit there and read the tape every single second of the day. So check it out, guys. Go to MarketFi. You know, Pete will put the link in the chat. I think he already did. Coupon code earlybird. All right, Lucci wants me to stop talking, so I'll give it up.
Indeed, indeed. Just to add to what he was saying too, it's more of you understanding how the market works. Tape reading is you really understanding the big players involved in the markets and what do they look like on the tape. What do they look like, and how do you see, you know, some big buyer collecting 100,000 shares, some big seller dumping 100,000 or dumping 500,000 shares? How do you look at that? And then how do you make a trade based off of that? And you can trade, you can swing trade. I've done many swing trades off of, you know, what I see on the tape, okay? Matt is saying, is tape reading only available on level 2? No, I mean, some platforms, depending on what you have, this right here is Fidelity. They have a separate, they have a whole separate thing for it. So they have a whole separate time and sales window where you can just kind of look into, and this is separate from your level 2, okay? So it depends on the platform. So my other platform that I use, they just kind of combine it, and it just rolls here next to the level 2, okay? So, it depends on your platform and what you want to customize it with and all that kind of stuff. All right, so questions, guys. Questions about weeklies, monthlies.
Shay is asking here, would it make sense to hedge a position moved against you, especially with monthly options?
Pete, you want to?
Yeah, sure. So, Shay,
it's a good question.
It really depends on your style of trading. It comes back to this again because, for somebody who's been tape reading for a long time, there's usually no point in hedging your position. Because hedging your position reduces your ability to actually manage the active position you're working on. The problem there is that, when you're working with a weekly option, you have to understand, this is something we talk about in our advanced course, is that you don't just go, full out on it, your full position right off the bat. You take time to kind of maneuver yourself into it. There's always time to work into the position. We actually are huge proponents of working into a position instead of trying to hedge it out and managing the risk in terms of, how much money you want on the line versus how much you're willing to lose. But again, if you're a monthly options trader and you're only swinging, you're kind of worried about, the market risk or whatever, systematic risk. You could possibly trade weekly options to hedge out a monthly options position. That's very possible. But again, it's more individual, and we do talk about this in our courses, and this is something we do focus on with each individual trader because, again, everybody has a different style. Some people would like to play spreads. Some people would rather play naked long or shorts, and it just really depends on your ability to manage your risk there.
Right, and actually, Ashia, just to add on to that, I mean, if you take a look, and by the way, I know you come from penny stock world. So if you come from penny stock world and you're doing all that crazy penny stock nonsense, you shouldn't have to worry about hedging positions unless you're talking about swings like Pete was mentioning. So for example, with this weekly that I was playing today, I'm only in with a little bit here and there. So I'll buy 10, I'll lose a little bit. Actually, today I was an asshole, so I was buying hundreds here and taking a big loser simply because I really thought this was going to happen. So I'm in and out quite often, and then finally, when I feel like I'm like, okay, there's a buyer here in this option, this thing's about to start moving, I'll just load up. I will just load up and then be on the keys very quickly just to get out of my position. And I know you play pennies, so I know you got to be quick with your stuff as well. So I'm sure this is probably not foreign to you either. But if you do have a swing position, like if you're swing short this Google and you want to protect against maybe, the market breaking out again or something like that, yeah, then, in that case, it would make sense for you to hedge that position, okay? But again, we're talking from a strictly day trading perspective here. If you're watching this and you're watching this actively, you have to focus on the trade that you're looking at, not on the hedge. Not on the hedge.
We got a couple other questions also talking about smaller accounts. And they're all asking about $3,000 to $5,000 accounts. And yes, it is possible to open up $3,000 to $5,000 accounts with certain brokerages. If you have questions about that, shoot us an email, Lucci@sanglucci.com. We will get to those questions. This is more geared towards the class and also the weekly versus monthly options.
Right.
If everybody's worried about small accounts, there are solutions for that. Shoot us an email about it.
Okay. So Matt, let's see. There was another tape question here. Tom is saying, is it useless to try to read tape on Thinkorswim or other conventional brokers? Tom, I started out with this platform right here. So actually I started out at a prop firm. They had a direct market access platform, but then I just moved over to Fidelity. And, the tape over here, now granted, it's all delayed. No matter what, like these things are delayed. Thinkorswim, personally, I think it's the worst out of the pack. Just with the delay. I'm just talking about the latency. The tape is still tape. So you're seeing the same data that I'm seeing here, or you're seeing the same data that I'm seeing on my direct market access platform, okay? So, you're seeing the same data. You might see it a little bit delayed. Muspet here uses TOS. He says it's pretty good. So, Tom, I wouldn't worry about it. Use it. The information is still very relevant.
I'd rather you guys if you guys are used to certain platforms for viewing, that's totally fine. But in terms of actually executing, this is another thing we talk about, is you should execute on direct market access platform because you want to be able to actually look at level 2s for your options and be able to actually, decide whether you're going to be, offering on a certain place or whatever it is, and just make sure that you're properly executing, because a lot of those slow platforms are going to screw you on execution.
Okay, now, CV is saying, I've always heard about tape reading is you get used to the speed of the tape. I mean, when it's flashing and running by, you're actually able to read it. Great question, all right? So oftentimes, when you're taking a look at a tape, let's say there's a crazy sweep up, right? And Google rips, or Google or Priceline will rip like 4 or 5 points in a second, okay? And you're not so much reading the transactions. Again, CV, you got to get away from reading every single transaction. Tape reading is not about sitting there to read every single transaction and figure out, well, what the hell does this mean? What the hell does this mean? What the hell does this mean? It's all about the reaction, okay? So if there's a big market sweep up, what's the reaction after? How did it get up there? Was it all prints on the offer? There's a lot more to it. And again, you'll start to realize it's a lot more about feel and understanding what to actually pay attention to. And it's not about looking at every transaction and trying to figure out what the hell does it mean. That is not what tape reading is, okay? Henry's saying, is E-Trade platform good for options or short trader? Both of them suck, just like the rest of them. Tom is saying, how's Lightspeed? Lightspeed is good. Lightspeed is a direct market access platform. And again, guys, in our class, we talk about platforms. We talk about routes, options routes. We talk about option rebates, all kinds of these things, which are the real nitty-gritty behind how these options actually move, how you can get rebates, how you can make sure you're paying low commissions. We talk about all that stuff in the class as well.
Chrissy actually has a decent question here. I see that Chrissy is slightly doubting our capabilities, which we don't mind at all. This person's asking, how can you watch everything? What about refreshing? Well, again, this is something we cover in our class. It's about setting up your watch list so you're not watching freaking everything. If you look at our positions, we always work things out here. And again, check out our class. If you have specific questions, a lot of you guys are asking things that we do cover in our course. You guys should check it out, all right? It's worthwhile.
Indeed. Any other questions here, guys? Any other questions? Nadav is asking, what about Interactive Broker? They're actually pretty good. They give some decent rates, and I know actually they do some advanced routing as well, but I would watch out for that smart order routing thing that they have over there. It's not exactly as smart as you think it is.
And also, you have to be careful of hidden fees also with that.
Yes. Muspet has said, you should stress that your course has a 30-day money-back guarantee. Well, thank you for pushing our product.
Thank you,
I saw it on the page. Muspet, by the way, guys, he's literally one of my top students. So, follow him on Twitter.
Give a little
Muspet.
on Muspet's story. I mean,
Muspet,
he started out,
I have no idea. I don't know. I think it was like 30, 40,000. I don't know. He's made a $500,000. I don't know. He's made $250,000 or $500,000.
He now trades full-time. I mean, Muspet's like our prototypical student. He quit his day job. He trades full-time. He's in Lucci's chat every day. We're not saying that every one of our students quits their day job and makes $350,000 a year, but Muspet shows that it's possible, man. And he puts on a lot less risk than Lucci does.
Yeah, actually, Pete, and guys, this is the power of and again, I'm not saying that my class is the best one on the street, and I'm not saying any of that. All I'm saying is that I teach you guys how to do this shit on your own and how to develop a strategy that works for yourself. Muspet doesn't do half of the shit that I do, and in fact, we battle each other out on on trades all the time. And he's completely developed his own strategy. So I try to give you the confidence that you need, that you don't need us anymore, and you can start building your own strategies, all right? Let's see.
Tom Bro's asking about another course that's offered out there and how he's actually learned at help bids, lifted offers, and all this kind of stuff. Well, a lot of tape reading classes out there, Tom, we're actually teaching you how to scalp. And I know this is the exact class you were talking about. Yeah. These guys are trying to tell you, watch out for one buyer and try to scalp it for maybe 10 cents.
Right.
There's actually a very much larger view of tape reading, which is what we teach. It's actually much less stressful than tape reading that they teach at other shops.
Yeah,
Tape reading we teach is actually much geared towards those that are trying to catch bigger moves and stuff.
Yeah, I learned from a class similar to the one that SMB teaches, and it's all very scalp related. Okay, and again, you got to think of it from the prop firm's approach here, guys, and maybe we'll piss some people off with this, but prop firms need you to trade. They don't make money unless you trade. All right. So the strategies that they sell you are high volume strategies to make sure that you trade your ass off, and you spit back a lot of commissions right back to them. Okay. And granted, I might be pissing a lot of people off here, but at the end of the day, that's what the business is. That is what the business is. So they need to make money off you trading. So scalping, you're going to be aggressively trading for 10 cents, 20 cents, 30 cents on stocks like JPM or whatever's moving, on that particular day, and you're going to be doing it 1,000 times a day. So a lot of equity scalp traders who work at prop firms, they trade 1 million shares a day. You get 100 traders, it's 100 million shares a month, actually a day. And you think about how much volume they have. If they're making rebates off of you, that's how they make their money, man. And it's not always the best strategy for you. That's all I'm saying. That's all I'm saying. You got to make the decision for yourself. It's not always the best strategy for you.
All right, guys. I think we're going to have to cut it there. But, yeah, you guys got the rundown. You know the class starts on Tuesday. You know the coupon code. And if you guys have any questions at all, shoot questions to Lucci at sanglucci.com, Charlie at sanglucci.com, Peter at sanglucci.com. We all check our emails. We will all respond. And Nadav, I see you there with your question. We will shoot you an email. Okay. Yeah, we'll make sure your question's answered, guys. Hit us up if you have any questions. Otherwise, we will see you tomorrow, hopefully in the chat if you're around.
Yeah. Tomorrow's going to be a good day. We're going to do a lot of writing, so we're definitely going to be very active tomorrow. We'll see. Coupon code again is Early Bird.
Early Bird. All right, Early Bird. If you type it in before Friday, you get $250 off, guys. Definitely hit that up.
All right, everybody. Enjoy your evenings. We will see you soon.